Hey Trade Pros, this is Mark from Trade Pro Academy, and in this weekend's video, we are going to discuss how to read retail trader sentiment and use this against the retail traders. Now, before we get into this, if this is your first time on our channel, welcome. If you're a returning viewer, welcome back. If you guys haven't subscribed to the channel yet, if you can do us a huge favor and go ahead and hit that subscribe button, smash that notification bell to get notified anytime that we do go live. And in addition to that, please make sure to smash that like button just to help us out with the YouTube algorithm and get us in front of other traders like yourself so that we can help a growing collective. All right, guys, so with that being said, let's jump into this actual video. All right, traders, so now that you've gone ahead and subscribed to the page and smashed that like button, you might be wondering, why are we looking to read retail trader sentiment? What's so important about retail traders? Aren't they losing money most of the time? Well, if that's what you were wondering, that is the right thing to wonder, first of all. And second of all, retail trader sentiment is important because they do lose money a majority of the time. So if you know what the majority or what the losing herd is doing, what better idea than to trade against what they're doing, taking these as contrarian signals. So in the past, we have done videos on utilizing the COT, the commitment of traders report. That is how we can track the activity of smart money, of professional money, the people that are doing this for a living, and the people that can actually influence the markets. However, retail trader sentiment is important because it gives us an idea of what the losing money crowd is doing and how we can position ourselves to make money on the back of them getting stopped out. All right, so great question, guys. Let's jump into the tools that we like to use here. First and foremost, the fact that majority of retail traders lose money is not some made up statistic. This is actual fact. And a lot of brokerages are now required to kind of post these things as disclosures on their website. And let me give you a good example of one right now. This is the FXCM website. They are one of the larger FX providers, no longer allowed to operate in the States, but they have quite a big market share here in Canada. A majority of brokers will share similar information, whether you're with Awanda, Forex.com, IG Markets, Saxo Bank, etc. What is important here is this disclosure, and what they're showing you guys is that this is actually a reality. A majority of retail traders do lose money trading CFDs with this provider. In this case, it's 70%. The numbers will differ across brokers, but what you will find, the overwhelming result will be that a majority of retail accounts are losing money. All right, and so that brings us into our next step here. How can we identify what these retail clients are doing, and how can we trade against them? Here we are on TradingView, and what I've got in front of you is a chart of the US dollar Swiss franc pairing, and I'm going to use this as an example to show you guys how you can use retail client sentiment in order to get, or rather identify, a potential trading opportunity. So the way that I like to use these is to look for heavy gearing on one side, whether it's long or short. Heavy gearing means, over 70% geared up on one side, whether that's 70% geared up long or 70% geared up short. I'll tend to look for high skews like that in markets that are approaching key swing highs or key swing lows. And what that's showing me is that if we're approaching a key swing high and I'm seeing that there's a huge skew of long open positions from retail, that's likely going to be an idea for a good short reversal trade. All right, opposite holds true. If we're trading into key swing lows and I'm seeing that retail client positioning is heavily skewed to the short side, that's likely telling me that we're probably going to have a fake out to the downside and that the markets are going to continue higher. So what you guys will see here on US dollar Swiss franc is that we did come up into a previous resistance. All right, if I kind of scroll out here, you will see this level was a good resistance before, held it there twice, and we came up into it recently here. All right, and so the Forex markets, in this case, I am speaking on Forex, but in Forex markets, since there is no centralized exchange, one single broker, they won't be able to give you a full understanding of what the whole market looks like simply because, let's say with this IG client sentiment, which I'll show you in a second, IG client sentiment will only show you the open positions for their clients. So you'll only get an idea of what IG clients are doing. Similarly, with the Oanda open positions, if we take a look at that, all that we're going to be seeing is the open positions for Oanda's clients. Now, that being said, if we tend to look at the larger FX brokers, such as Oanda or IG, you can kind of get a better idea of what the overall market is looking. Because they hold a majority of market share in this industry for Forex trading, they trade a lot of the volume. That's where we're going to see, more accurate, if you will, uh, positioning. So first tool, let's take a look at it. This is the IG client sentiment um, report right here. And this can be found on dailyfx.com/sentiment. And what this guy will show you is a bunch of the currency pairs as well as some CFDs on gold, silver, oil, and some of the US and foreign equity indexes, as well as some of these cryptocurrencies. All right. And so what I like to do here is take a look at these, and what it's showing you here is net longs versus net shorts and the change in between these. Now you can do this on a daily basis or on a weekly basis. For the purpose of this example, we'll just do it on the daily basis. And so what I'm seeing here as we're looking through, we're looking for heavy skews to one side or the other. And so looking at Euro USD, this looks pretty balanced. USD, Japanese yen, again, pretty balanced. Aussie dollar, US dollar. This one's starting to look a little bit better. We've got 63% of IG clients are actually long the Aussie dollar against US dollar. And so that's giving us potential for a short trade. All right, so that's one idea. British pound, US dollar, relatively mixed. USD CAD, again, bearish. So a majority of traders here are bearish for IG clients. So USD CAD also a potential long opportunity. US, or rather Kiwi USD, this one is really garnering some interest from myself here. 69% of the book is short at the moment. And if memory serves, New Zealand dollar, US dollar has been making pretty significant highs here over the last week or so. And so no real surprise to see a majority of the retail clients uh, being short in this case, because like I said at the beginning, these guys are often wrong. Scrolling on down, what else do we have here? Any big skews? We've got Euro Swissy, not really a pair that we trade. Euro British pound, also pretty nice skew here. 73% of clients are long the euro yen, or rather the euro pound, and this one has been hitting fresh lows. So you guys can see that, you know, retail clients are wrong and wrong often. Here's the pair that we're looking at, US dollar, Swissy franc. 77% of retail clients are long on this pair, right? Only 23% are short. That being said, the retail crowd is usually the losing crowd. So the fact that 77% of these traders are long on this pair means that we're probably going to see a reversal, or there's already a reversal underway. And so that's how you tend to use these reports. Now looking at Oanda, right? Oanda here, oanda.com/forex trading/analysis/open position ratios. This is essentially showing you the same information. However, this is for Oanda clients, as mentioned so kindly right over here. And on here as well, what do we see? The third from the top, US dollar, Swissy franc. 60% of Oanda clients are long this pair, and just under 40% are short this pair. So between these two brokers, which hold quite a significant amount of FX volume, it's showing me that a majority of retail traders across these brokers are short, or rather are long the US dollar Swissy franc pair. So now as I switch back to this chart, what you guys will see, no surprise, this pair is down and down quite significantly since reversing from that key round number of $1 even. And again, it should not come as much surprise. Why is that? Because as we are trading into a key supply level, key resistance level, whatever you want to call it, the signs were there. The fact that retail was predominantly geared up along here, in fact, heavily skewed to the long side. And as we're coming up, we did see the price action that we wanted to see, especially this little pin bar here that traded into these previous wicks, failed, closed near the lower half of the candle, and the following session is where the selling came out. And now, as you guys can see, we have had a bit of a reversal. These key lows have been hit here right around this 983 zone. Next level below, potentially coming down into this 971 region where we had previous swing lows. And with this, if you do get in the trade and you do catch the reversal, you can use this client sentiment index to kind of get a better idea of when you should take profits, right? If this index remains skewed to the long side, all right, what you're going to want to see if you are short is that this difference holds as you start seeing retail starting to flip sides, as you start seeing retail closing out those longs and start opening up shorts. That's essentially when it's probably a good time to start taking profits and then looking to catch the opposite side of the trade. Once retail starts shifting from majorly long to neutral or to picking up on the majority being short, that's when it's a good time to start looking to take profits and potentially switch sides. So hope you guys enjoy this one. This is one of the quick little tools here. Again, reading what smart money is doing is offered to you guys through the COT report. You guys can check that out on the video that's going to be posted just above this screen right now. Make sure to check that out. Outside of reading smart money, I think reading what retail is doing, seeing how they're positioned and where they're positioned as prices coming into key swing highs or swing lows here on the daily charts, that can really be a powerful strategy. And like I said, you do not want to use this in isolation. Just because the client sentiment says a majority of traders here are long, that doesn't mean that you simply open up a short on this pair. You're going to want to follow your strategy, whether that's using levels, whether that's using indicators, etc. But now you have extra or added confluence or confirmation for your trades. If you're looking to get short at a key level and retail is heavily long, then that's a check mark for a qualification for that trade, and that just makes it that much stronger of an idea and more probable to work out. All right, guys, so I hope you guys enjoyed this one. Until next time, good luck and good trading. Don't forget to smash that like button and don't forget to subscribe and check out that notification bell. Until next time, take care.